Hello everyone, welcome to the Daily Intrinsic. Today I'm going to share with you my valuation of Apple, and it's going to actually be the first valuation I'm going to have on my channel here, the Daily Intrinsic, and I can't think of a better company to value than Apple. It's the perennial cash machine. Everyone's always talking about it. I own all the products, and actually it was the first stock I bought 15 years ago. So let's dive into it. Let's look at the numbers and get right to it. So Apple's total value is just over $3 trillion. It's an eye-popping number. It's right here, value of equity in common stock. And on a per share basis, right below that, comes out to about $184 per share, which is just about in line with Apple's current trading price. So a little undervalued, but not exactly within the margin of safety. So Apple's financial year just ended at the end of September with revenues up 29% year over year. It was a solid year for Apple despite all of the supply chain issues, semiconductors. They did fantastic. And so I think that $3 trillion valuation is well earned on Apple's part. But what can they do in the future? My valuation is not just about what's gone on in the past, but also what's going to happen in the future 5, 10, 15 years from now. And despite all of this talk about the Apple Watch, TV, accessories, wearables, and all of that is important, but at the end of the day, Apple is still an iPhone company. It's a phone company. And also services play a big part of that as well. And so those are the two things I'm going to focus on today, not to brush everything off to the side, but when it comes to Apple and its value, it's all about the iPhone. It's all about services. So as it stands today, the iPhone makes up about 45% of the value of Apple, by far the biggest one. And so the next one is services, and that's about 25%. So if we add those two together, it's almost 2/3 of the company. As you know, the iPhone 13 came out in all of its different varieties, and that's important. There's been a lot of demand, strong demand for the iPhone 13, which is great news for Apple. But really, the pivotal moment was the iPhone 12 and the 5G capability in the iPhone 12. That really sprung everything for Apple, especially outside of the United States. Now, 5G capability is a discussion for another video some other day, but it's going to be a pivotal feature for people wanting faster speeds from their phones in the future. And so that played a big part in my valuation of Apple. My rationale on that basis is that there's three main categories that people who buy phones really care about, and that's price, battery life, and capability. And by capability, I'm talking about the recent 5G improvements. So with that being said, I actually think that in the next 6, 7, 8 years that Apple is going to achieve over $220 billion in revenue from their iPhone alone. Widespread acceptability of 5G compatibility is one of the issues. Apple's integration of more proprietary software and hardware into their phones keeps pushing that price point for the iPhone up higher and higher. So not only are people adopting the iPhone as all this 5G technology comes out and everyone wants faster speeds, but also at the same time, Apple is just jam-packing the iPhone full of this proprietary technology that they can justify a higher price point, and that's going to increase revenues in the next 3, 4, 5 years. On top of that, Apple's ecosystem enables greater loyalty to the iPhone. Chances are, if you watch Apple TV, if you have an Apple Watch, if you have a Mac or an iPad, you probably have an iPhone, and a lot of people have that. So within that ecosystem, it promotes having an iPhone. That ecosystem is something that Samsung, Huawei, Motorola, whoever just simply can't compete with. Another thing that really intrigued me about the iPhone, and which probably increased the valuation, was the gross margin of the iPhone. I truly think for about the next decade, Apple's gross margin on their iPhone is going to be over 40%, probably at that 42% consistently for about the rest of the decade. The one thing that could hurt their gross margins in the future is their lower priced products. You know, if we think of like the light versions of the 12 or the 11 XR, whatever it might be, if they continue on that path and they focus a little too much on the light versions of their products instead of the high-end versions like the iPhone 13 Pro, iPhone 13 Pro Max, that could have a little bit of pressure on their gross margins. But Apple being Apple, I'm not too worried about that. So now that we talked about the iPhone in particular, let's talk about services. I'm extremely upbeat about Apple services, and I actually think in the near future, maybe 3 or 4 years, we're going to see that overlap with the iPhone. I think at some point, services are going to make up about 50% of Apple's revenue, and iPhone is going to drop down to about 30% in the near future. When I talk about Apple services, I'm talking about like the App Store, Apple Music, Apple TV, Fitness, Apple Pay, all of these other products that you get when you buy something made from Apple that you use on your Mac, your iPhone, the watch, whatever it might be. And also let me mention cloud storage space, which are directly competing with Google. But like I said, if you have an iPhone before, you're probably going to use Apple iCloud instead of the Google Cloud. But it really comes down to Apple's ability to tightly integrate their products with their services. It's all about that ecosystem, which is why I think in the long term, Apple services will overtake any other of their business segments and actually be one of the driving revenue streams. So here's my big, bold prediction with Apple services. I think they're going to actually have over $138 billion in revenue by the end of the decade on services alone. But if you add in subscription costs to Apple Music and also iCloud, I actually think that pushes it above the 240 to 250 billion mark per year in revenue, which would place it above the iPhone. I expect in the near term that Apple will invest an increasing amount of assets and resources into their cloud-based technology, and I think they're finally going to be able to compete with Google. And that's just simply because Apple has a huge user base, and that's something that Google just doesn't have with their ecosystem. Google has an ecosystem, but it's nothing compared to Apple's ecosystem. The value per user of Apple is much, much higher than the value per user of Google. So when you think of Apple's services revenue, you have to almost think of iCloud as a separate division. And that's what I do here. I add up, when I talk about services, I add up Apple, the Apple Store, and Apple Pay, Apple Care, and I compute all those numbers separately from the iCloud, because right now the iCloud, there's just too much, the ceiling is too high on Apple iCloud. So I really wanted to keep this video short, so I'll probably end it there. But the highlights of the video is that it's a $3 trillion valuation, $184 per share, and the big thing to remember, it's iPhone and services, and in particular, iCloud. Keep an eye on iCloud, how they invest in iCloud, what they do in that area, and how they compete with Google, because that's going to push that valuation up even higher. Like I said, if they can get services over $240 to $250 billion in revenue by the end of the decade, it's going to be impressive for Apple, and that valuation is probably going to go higher than $3 trillion. So I hope you enjoyed the video. This was more of like a test video than anything, showing my valuation technique and my Excel spreadsheet. If you'd like to see more, please let me know. Leave a like, thumbs up, whatever it is that they do on YouTube nowadays, and I'd love to hear from you and what you think. Have a nice day, everyone. See you next time.